This is On The Charts with Nick Radge, your Australian stock market update, highlighting stocks on the move so that you can invest with confidence and success.
The information in this podcast is general advice only and does not take into account your personal situation. Please consider if it is appropriate to you and consult a licensed professional before making any investment decisions. The information provided is believed to be accurate at the time of recording.
Welcome to the On The Charts podcast, episode 199 for Friday 19th of May 2017. US markets steadied overnight, closing slightly firmer. A significant amount of commentary is suggesting that yesterday's volatility was options driven, specifically on back of expiry plays. The S&P 500 index is now back into its range, which has stood since late February. Whilst today's close was off the session's highs, it would be remiss to get overly bearish until the lower side of this range is actually penetrated with any conviction. The Dow Jones closed 0.25% high, S&P rose 0.4%. Next week is the long-awaited OPEC meeting on Thursday night, which will determine ongoing production cuts. There will be also a few minor economic releases in the US, including consumer sentiment and GDP. In other news, the Brazilian stock market, known as the Bovespa, sunk 9% on accelerating political turmoil, and the 3 times geared ETF that tracks the Bovespa plunged some 50% in the session. The Australian market today continued to show how pathetic it really is by falling another 0.5% towards 5,700 in early trade before finding some kind of a bid. Banks led the way lower, but materials and big miners fought back. BHP added 1.2%, Rio rose 2%, and Fortescue, which we discussed a few episodes ago, is having the expected bounce, strengthening 5% today. ANZ closed 1.9% down and Westpac continued to slide, losing 1%. Certex recovered some of yesterday's losses, rising 9%, but we expect quite a lot of volatility there as investors absorb the latest data and review their positioning. Small ordinaries bucked the trend, closing positive on the day. And at that close, the main ASX index was down 0.2% and the smaller caps closed 0.3% higher. The best performing sector was the materials, adding 1%. A few stocks of interest to close the week off. Mantra Group is the number one strata title property operator in Australia, with over 76 properties operating under brands such as Peppers, Mantra and Break Free. The company has almost 15,000 rooms under management and they manage over $8 billion worth of property assets. Analysts are upbeat, suggesting threats from Airbnb will only impact a much smaller subset of the business. It trades at a steep discount to global peers, and the recent Alamo One acquisition will continue to perform strongly versus initial expectations. The current share price is $3, with some broker valuations as high as $4.20. Now, technically, the stock has been forming a basing pattern for most of 2017 to date. We favour such basing patterns as a solid foundation as the beginning of a new trend higher, and volume has started declining in the last month or two, which is a positive trait, suggesting higher prices are probably closer rather than further away. We like to see some more posturing here and higher closes, and that would then point to an imminent breakout and potentially a new trend higher. Certainly one to watch on with the technicals and fundamentals lining up and pointing in the same direction. Whitehaven Coal was featured on this podcast back in early April, and at the time we suggested the possibility of a false breakout. Well, prices did reverse and are now back at an important juncture. Whitehaven is Australia's largest independent coal producer and operates 5 mines in northwest New South Wales. These sites produce thermal and metallurgical coal primarily for the export markets in North and South Asia. Analysts view the various company metrics in a favourable light, citing increasing production, improving product mix, and the possibility of better price realisation in the future. As mentioned, the stock price has fallen back to a zone of support around $2.50 after tracking in a broad sideways band since late last year. The prior trend was very potent, so a pause such as this, albeit frustrating for investors, is actually pretty good quality health. There's some scope here for prices to dip one last time, slipping below the support zone and quite possibly shaking out some of the weaker hands, but any immediate reversal or rejection from such a pro blower will be a very bullish signal. On such a signal, partial long trades could be initiated, the risks being that the stock continues to range trade. However, if we get some upside momentum start to gather pace, then secondary positions then could be added. Just a reminder that tonight is the last night of the Big Picture Week. Even so, you still can get access to all the reviews of the week and all the videos that have been done, as well as continued access to other portfolios and our full educational material. Simply head over to thecharters.com.au, start your 2-week trial, and you'll get immediate access. My name's Nick Radge. Have a great weekend, and I'll see you on the charts on Monday.
On the Charts with Nick Radge, brought to you by The Chartist. Join Nick and the team at Noosapalooza Trading and Investment Conference, 20th and 21st of July in beautiful Noosa, Queensland. Visit thechartist.com.au and click on Noosapalooza in the menu for details.